The complexities of multi-state payroll processing in modern accounting practices in today's increasingly interconnected business landscape. Managing payroll across multiple states has become an intricate challenge for accountants and financial professionals. As companies expand their operations beyond state borders, they encounter a web of varying tax regulations, employment laws, and compliance requirements that demand meticulous attention. This complexity is further compounded by rapid changes in legislation and technological advancements reshaping traditional payroll systems. Accountants must navigate these evolving challenges while ensuring seamless accuracy in compensation calculations, deductions, and timely reporting obligations. Navigating state-specific tax regulations. The foundation of multi-state payroll processing lies in understanding and adhering to each state's distinct tax frameworks. With over 40 different income tax jurisdictions operating within the United States alone, businesses face a daunting task when attempting to maintain compliance across all applicable regions. Differential tax rates are a primary concern for employers. For instance, California imposes a top marginal rate of 12.3% on high-income earners compared to New York's 8.82%. These disparities necessitate careful tracking of employee locations and corresponding withholding obligations. Federal withholding requirements also interact uniquely with state-specific rules. While federal taxes follow standardized tables, state-level withholdings often require additional layers of calculation based on factors such as marital status, number of dependents, and income thresholds. Tax filing deadlines vary significantly. Some states mandate monthly filings, while others permit quarterly submissions. Texas requires bi-weekly reports for certain industries but allows quarterly submissions for most sectors. Withholding formula differences. Washington state employs a flat-rate system without graduated brackets, unlike most other states which use progressive taxation models. State-specific exemptions. Illinois provides a personal exemption of $1,600 annually, whereas Pennsylvania does not offer any standard deduction allowance for single filers. The interplay between state and local government entities introduces another layer of complexity. Cities like Chicago and San Francisco impose additional municipal taxes that can range from 1.5% to 2.75%, depending on the industry sector and company size. Misclassification errors can lead to severe penalties ranging from 25% to 50% of underpaid taxes plus interest charges. A recent case study revealed that a mid-sized retail chain incurred over $1.2 million in back taxes after incorrectly categorizing part-time employees in Florida who worked remotely from Georgia. To mitigate risks, many firms invest in automated payroll platforms equipped with real-time updates on regulatory changes. These solutions integrate geolocation data with employee records to ensure accurate classification at both state and municipal levels. Evolving compliance requirements across jurisdictions. Legislative reforms continually reshape the payroll processing landscape, requiring constant vigilance from accounting teams. In 2023 alone, 28 states introduced new wage garnishment policies affecting overtime pay calculations, child support deductions, and student loan repayments. Audit frequency and scope have increased substantially due to heightened regulatory scrutiny. The Internal Revenue Service reported a 42% rise in multi-state payroll audits during Q3 2023, emphasizing the need for robust documentation practices. New York City's revised paid family leave policy, effective January 2024, mandates employers to cover up to 12 weeks of unpaid leave with benefits calculated at 70% of average weekly wages. This change affects approximately 90% of Manhattan-based companies with 5+ employees. Electronic submission mandates have expanded nationwide. As of December 2023, 37 states now require electronic filing of Form W-2s through official portals rather than paper submissions. Failure to comply may result in automatic fines starting at $50 per affected employee. California enacted AB 2257 in September 2023, imposing stricter restrictions on salary sacrifice arrangements where employees voluntarily reduce base pay for fringe benefits. This law particularly impacts tech startups offering equity-based compensation structures. Retail chains operating in multiple states recently faced unprecedented scrutiny regarding tipped minimum wage classifications. A prominent national restaurant group was fined $3.8 million in 2023 for misclassifying servers' tips in Nevada and Colorado. Accounting departments must implement dynamic compliance monitoring systems capable of tracking legislative changes in real time. Advanced software solutions now feature AI-driven alerts for impending regulatory shifts that could impact payroll procedures. Leveraging technology for streamlined processes. Modern payroll technologies offer innovative solutions to manage cross-jurisdictional complexities efficiently. Cloud-based platforms enable real-time access to updated tax tables, regulatory guidelines, and employee location data essential for accurate processing. Artificial intelligence integration enhances error detection capabilities. Machine learning algorithms analyze historical data patterns to identify potential discrepancies before finalizing payroll cycles. One major accounting firm reported a 68% reduction in manual review time using predictive analytics tools. Blockchain technology is emerging as a transformative force in secure transaction verification. Pilot programs in several Midwestern states demonstrate how immutable record-keeping can prevent disputes related to payroll tax remittances and employee benefit distributions. Robotic process automation, RPA, streamlines repetitive tasks associated with multi-state payroll management. Automating form generation, data reconciliation, and report creation frees up staff to focus on strategic financial analysis rather than routine data entry. Voice recognition interfaces integrated with payroll software allow for hands-free data input, reducing human errors during busy periods. Early adopters saw a 32% improvement in data accuracy metrics within 3 months of implementation. Interoperability features ensure compatibility between various state-specific platforms. Unified dashboard systems provide consolidated views of compliance statuses across all operational regions, facilitating centralized oversight. Data encryption protocols protect sensitive employee information during transmission and storage. Leading payroll providers now utilize quantum-resistant cryptography measures to safeguard against future cyber threats. Ensuring accurate employee classification. Categorizing workers correctly is critical in multi-state payroll environments. Misclassification can trigger substantial penalties, including back taxes, interest, and legal fees stemming from labor law violations. Independent contractors versus employees distinction remains a complex issue, especially in gig economy contexts. The IRS uses a 20-factor test considering behavioral control, financial control, and relationship type to determine appropriate classification. Some states apply stringent criteria for independent contractor status. Massachusetts implemented SB 2075 in 2023, mandating that companies classify remote workers based primarily on work location rather than contractual agreements. Hybrid worker arrangements introduce added complexity. Employees working split schedules across multiple states may qualify for different benefit packages and contribution rates depending on hours logged in each jurisdiction. Industry-specific regulations further complicate matters. Healthcare workers in New Jersey receive different treatment under the Workers' Compensation Act compared to those in Ohio, impacting payroll liability calculations. Recent court rulings emphasize strict interpretation of worker classification standards. In 2023, a landmark decision in Oregon required a ride-sharing company to reclassify 12,000 drivers as employees, resulting in millions in retroactive payments. To minimize risk, Expo comprehensive checklists help ensure alignment with current legal definitions across all relevant jurisdictions. Managing benefits administration across jurisdictions. Benefit administration presents unique challenges in multi-state operations, requiring careful coordination among various stakeholders. Health insurance plans, retirement contributions, and paid time-off policies differ significantly from state to state. COBRA continuation coverage rules vary considerably between states. Michigan extends COBRA eligibility period to 36 months post-termination, whereas Wisconsin limits it to 24 months unless qualifying for special circumstances. Pension plan requirements also show regional diversity. Defined benefit plans in public sector jobs are governed by different formulas in each state, creating complications for companies employing hybrid workforces. Healthcare exchanges operate under federal authority but contain state-specific variations. Premium subsidies and cost-sharing reductions depend heavily on household income levels assessed according to individual state guidelines. Workers' compensation insurance calculations incorporate geographic variables. Rate classifications in manufacturing sectors differ between states like Indiana and Tennessee, affecting overall premium costs. Disability insurance mandates present another layer of complexity. While some states require employer-paid long-term disability coverage, others rely entirely on voluntary employee participation programs. Implementing centralized HRIS, Human Resource Information System, platforms help streamline benefit administration across disparate locations. These systems automatically adjust offerings based on employee residence and job function requirements. International payroll considerations for global organizations. Global enterprises face even greater complexity when processing payroll across international boundaries. Currency conversion issues, foreign exchange regulations, and varying Social Security contribution structures create significant administrative burdens. Tax treaties between countries aim to prevent double taxation but remain subject to interpretation. The U.S.-South Korea Treaty contains specific provisions for expatriate employees that must be carefully applied to avoid compliance pitfalls. Social Security contributions vary dramatically worldwide. In Germany, employers contribute 27.5% towards statutory pensions, whereas the UK levies a national insurance contribution rate of 13.8% for employees earning above £100,000 annually. Visa sponsorship responsibilities affect payroll processes for international employees. H-1B visa holders in the U.S. typically require separate payment handling to accommodate non-resident alien tax treatments. Repatriation of earnings involves navigating foreign exchange controls. Countries like China and Russia impose currency transfer limits that must be factored into global payroll planning. Cross-border data privacy laws pose additional challenges. GDPR regulations in Europe require extra safeguards when transferring employee information outside the EU, adding procedural steps to standard payroll workflows. Specialized multinational payroll software integrates country-specific tax codes, regulatory requirements, and currency conversion mechanisms to facilitate compliant global payroll processing. Strategic planning for scalable payroll operations. Organizations expanding into new markets must develop scalable payroll strategies that anticipate future growth needs. Proactive planning reduces the risk of encountering capacity limitations during unexpected expansion phases. Cloud infrastructure provides flexibility for scaling payroll operations rapidly. Hybrid cloud solutions combine on-premise security advantages with the scalability benefits of cloud computing environments. Process mapping exercises help identify bottlenecks in existing payroll workflows. Visual representations of current procedures make it easier to pinpoint areas needing optimization before implementing upgrades. Scalability testing ensures systems handle increased volumes without performance degradation. Load simulation tests measure response times under simulated peak conditions typical during end-of-month closing cycles. Vendor evaluation processes should include assessment of scalability capabilities. Requesting demos that showcase handling thousands of concurrent users helps validate vendor claims about system capacities. Contingency planning addresses potential disruptions in payroll processing. Backup generators, failover databases, and disaster recovery protocols constitute essential components of robust business continuity plans. Training programs prepare staff for scaled operations. Cross-training initiatives ensure knowledge sharing occurs organically as organizational needs evolve over time. Continuous improvement through data analytics. Data analytics transforms raw payroll information into strategic insights that drive continuous improvements in financial management practices. Real-time dashboards provide visibility into key performance indicators crucial for informed decision-making. Predictive modeling identifies trends and anomalies that might indicate systemic issues. Anomalies in payroll processing volumes can signal underlying problems such as data entry errors or changing workforce dynamics. Root cause analysis methodologies trace the origins of recurring issues. Mapping out the entire payroll lifecycle helps isolate contributing factors behind persistent inefficiencies or compliance concerns. Performance benchmarking compares organizational metrics against industry standards. Identifying gaps enables targeted improvements focused on areas lagging relative to best-in-class practices. KPI tracking systems monitor progress toward established objectives. Metrics like payroll cycle time, compliance audit scores, and error resolution rates provide measurable outcomes for performance evaluations. Machine learning algorithms detect subtle patterns that human analysts might miss. These advanced analytical techniques uncover hidden correlations between seemingly unrelated variables affecting payroll efficiency. Actionable recommendations emerge from thorough data analysis. Structured feedback loops ensure findings translate into concrete initiatives aimed at enhancing operational effectiveness. Conclusion: the multifaceted nature of multi-state payroll processing demands ongoing commitment from accounting and finance professionals. Successfully navigating this terrain requires staying abreast of ever-changing regulatory landscapes while leveraging technological innovations effectively. By prioritizing precision in tax computations, maintaining rigorous compliance standards, and embracing digital transformation opportunities, accountants can transform payroll challenges into strategic advantages that strengthen overall financial governance.